And we are back. We had the day off yesterday, like the whole market did, Matt, with Martin Luther King Day. But we are now back live here for our halftime report. It's Tim, it's Matt, it's Cody. Tackle Trading is here. Matt, how you doing this morning?
Tim, doing very good. Excited to be back with the crew after a couple of days off last week. Spent the weekend down in Houston with a great group of legacy students, and I'm happy to be back with the crew.
And if you do want a webcam, you will need to turn that on. If not, no big deal. But let's rock and roll through the market here. Oh my, what a sell-off. Not exactly aggressively crashing or anything like that, Matt, but it is a profit-taking day for the first time in some time. Your first reaction has to be, well, I was waiting for this, right?
Yeah,
But
you couldn't do this last week when we had a
right.
perfect trigger setup on the bear side.
Oh,
Right.
markets have a way of doing that. What's your instant reaction to the price action in the market? Selling off, showing some weakness.
Honestly, it's so far overextended in the short term, Tim. It's due for a little bit of a retracement, and I think for a lot of the bulls out there, you got to celebrate the first of the year. There's absolutely no doubt about that. But at the end of the day, I mean, this for me to get aggressive on a bullish trade, I would love to see a retracement coming back down into a moving average. A lot of these stocks are now overextended to the upside. We could certainly chase it, and you have to above those moving averages. But at the end of the day, I would love a little bit of retracement back down into that 25.50 level, and we'll see what happens. But for right now, a little bit of profit taking coming out of some negative news internationally.
Yeah, for sure. And by the way, if you're welcoming yourself in here, I'll give you an official welcome and ask you for a quick like and a share. If you're new to Tackle Trading, make sure that you subscribe to our channel and click the bell so you're alerted of our daily live halftime report where we, go through the market each and every day, Matt. I'm looking at the red candle. We're still above a moving average on the S&P here, and actually old support at 2600, 2620. Current prints 2633. Unless it got more confirmation and further selling, this could just be a one-day blip on the radar. Mixed technicals, and we had a long debate at Tackle Trading over the weekend. Where are we going to rate the market? And we literally put it on the 50-yard marker. I think today is confirming some of that.
Well, I think you had to. I wasn't in the scouting report meeting this past Friday, but I reviewed them over the weekend on Sunday, as I always do. I looked at the reports and the newsletter where we rank all those different sectors and the markets and the dollar and the commodities and whatnot. And I think you have to rate it right there at 50-50 right now. I think you got to go neutral. We talked about it last week on Monday and Tuesday as the market was approaching 2,600, breaking up above 2,600, that you had to go into a neutral territory. So, you want to be a little bolder in your picks, but it's not our job to be bold, Tim. It's our job to make sure that we're ranking things appropriately to the market condition. And you're overextended in the marketplace. We all know that we need to get a little bit of profit taking for buyers to come back in. You had relatively light volume in this at the first of the year. So yeah, do you want to go and give the S&P 500 a very bullish ranking when it's overextended and coming into weekly resistance levels? No, I think you rated it appropriately.
Well, you do have that mix from a time frame perspective. And, being Tuesday, we usually do Delta Tuesday, but we miss Monday. So today what we're going to do, Matt, is we're going to break down all the different sectors and look at the major markets and the different analysis. On the S&P here, go through that weekly and daily dynamic, because I think that really is the debate right now.
Well, in any time you're having a hard time reading this short-term marketplace, it's always very appropriate to switch it out to a longer time frame to kind of get a little bit of a different perspective. And as you can see, we're coming down. We do still have a bearish downtrend on the weekly chart. You have a bearish retracement still on that weekly chart. And Tim, historically speaking, this could be a very, very, very nasty sell-off when you get into that kiss of death type formations. If you're looking at this as a head and shoulders formation, left shoulder, head, right shoulder, that would technically be a kiss of death. Now, in terms of the kiss of deaths, don't just go down immediately, right? They take time to kind of build out. But if you want to kind of just get a little bit more time frame, and I do think having historical understanding is important in this. So if we want to go out to a little bit more of a here's your time frame here. So here's your double top, double bottom, and there's your kiss of death over here. So Tim, as you can see at the first of the year coming into 2008, you formed this nice little bearish retracement coming back in, and then you start coming back down. It's not till it breaks that support level T that you see the massive volatility. So I'm not going to sit there and say that, one down day is going to make a kiss of death. That's just foolish, and that's irresponsible. You're looking at it right here in that pattern T. That little upward movement's coming into that weekly channel. And then how many weeks does it take to kind of just fill out? It takes another 5 weeks of just up and down, up and down, up and down. And so when I'm looking at the market right now, Tim, I don't think the market's going to pick a strong direction one way or the other right now. I think you're going to see a little bit of what I call fade action. And what I mean by fade action, a little up, little down, little up, little down. And I think it's going to be a stock picker's market for the next few months.
Yeah, especially as we churn through earnings and you're going to get different news stories kind of playing themselves out. One that popped its head back up that's been a consistent theme through 2018 and even into the first month here has been China here, Matt. And they posted a GDP number, I believe, that showed that they were only growing at like 6%, 6 point something.
It was 6.6%. GDP came in at 6.6%, and that was the lowest level that China has been growing in a year. And that 6.6 is for 2018. So it was 6.6%. That was the worst it's been since really, what was it, 1990, I want to say?
Yeah.
Now, some people might be thinking, oh, man, it's China. It's 6.6%. I mean, if the U.S. was growing at 6.6, yeah, if the U.S. was growing at 6.6%, you might be talking about little increased levels of inflation there. But so it's not apples to apples when you're comparing GDP growth versus the U.S. in comparison to GDP growth versus, say, China or India or any of those emerging markets. And China has done such an amazing job in growing their economy and modernizing their economy and building infrastructure, even outside all of those fake cities. So, I mean, they a lot of that 6%, a lot of investors know this, it's done based on these artificial means of growing an economy. But you have to give China a lot of credit in the last 10, 20 years for modernizing an economy that was still to some degree feudalism, even 20, 30 years ago. So it's been an amazing ride for China. But when you do come in at 6.6% versus an estimated that was supposed to be higher than that, it fits into that entire philosophy that's coming into 2019 of slowing growth. And it wasn't just China that came out overnight. It was also the IMF, Tim. The IMF came out over the weekend. They cut global growth down to 3.5 to 3.6% in 2019 and 2020 versus an expectation of 3.7%. And so you're starting to see these growth concerns coming out a little bit. It's going to be the topic for all of 2019. How the market responds to that, we'll read that on a daily basis with the price action. But it just gave more cause for concern about slowing growth. And that's why you're seeing a little profit taking today. But that's all I'm taking today Tim. I'm just taking this as profit taking. I don't see any massive movement here so far.
Yeah. Top 5 gainers on the S&P here today: eBay, Cboe Global, Fifth Third Bank, Chipotle Mexican Grill. They still have PCB listed on them, but obviously not an S&P component here anymore, but they're up 10%. eBay gapping out, showing a lot of strength here, and that's a non-earnings gap, Matt. Whenever you see that kind of thing, your first thing you're going to do is go look at the news headlines, and I'm sure it was upward guidance.
Before you ever even looked at it, I was literally typing in eBay into a scanner to see what was going on. And shareholders suggest shedding business lines, stocks dip on fear. Let's see. They're selling assets, restructuring.
eBay soars on activist interest on midday. So some of their bigger shareholders that are hedge funds are coming out and saying, hey, we want to restructure the way you do business. They've got some sway and maybe the business operations like that. Nice reversal pivot here. Earnings coming up. Obviously not going to be.
I'm sure the CEO of eBay loves the hedge funds coming out there and telling the CEO how to run Starbucks. I'm sure they just enjoyed that conversation. But you know what, Tim? That's why institutions have so much pull with these publicly traded companies, and why these publicly traded companies do so many things like increase dividends, stock buyback programs, because they help investors. And who are the number one investors of Starbucks? It's the institutions, it's the hedge funds. So when you have a big hedge fund or a big institution take a massive position size in your company, they got a lot of sway. There's no doubt.
Yeah, I'm looking at the losers here. Arsenic,
Hold on. Let's look at a couple of those other
Gainer,
headline ones.
Cboe Global, then you CBOE, and then you also got Fifth Third Bank and Chipotle, your favorite Mexican company, Matt.
Yeah, I'm not seeing any trade there in CBOE. We got CMG, little Chipotle action. Little want to break out. Little
Not
Frank
so
breakout.
quietly is at the top of the chart, nearly hitting a 52-week high, Matt.
Not so quietly attempting to break out a major resistance between 530, and I would put that somewhere around 540 in that range. But you got a real big range potential breakout there. You do have earnings coming up, as we do with a lot of companies, but yeah, the breakout king, Frank loves breakouts.
Breakout Frank, he's earned that nickname. There's no doubt about it.
PCG.
Arcanic,
Let me just show you what a 10% bump in a
sure.
downtrend looks like. Okay.
PCG,
Yeah, that's what a 10% bump in a downtrend looks like.
oh, looks golden.
Oh, let's buy. Crazy.
Obviously ugly. And by the way, all is right with the world. GE is down 5%, so that does make me happy seeing that trash company sell.
You just are so emotional about it. It's funny.
I don't have any trades on GE at all.
You haven't traded GE on the buy side in ever.
You know what it is I've had some discussions with investors that I was trying to teach, and they were so stubborn about owning GE because their grandpa gave it to him, paid him a dividend and all that kind of garbage. And I'm just thinking, your emotions should not impact what you see. And that should be true of me as well. You have a W reversal here developing above the MAs. I still hate the fundamentals though, Matt. There's no way I would touch the company.
I'm not touching GE, but as an investor, if you are looking at GE for a potential dividend pay or whatever the case is, it's outside my purview. I don't understand it. But if you are looking for that and you see this little W reversal and a retracement back down into $8, T, that's a buying opportunity. I mean, technically speaking, it's a buying opportunity. I'm not going to do it. GE's not my cup of tea. But I understand, because I do that same thing, T, when I'm trying to teach a principle and they're like, oh, but I've held it for 75 years. I'm like, all right, fine, whatever, do whatever you want. No, I'm with you on that.
I'm looking at the overall markets here, Matt, and you do have broad-based weakness across the board, which is going to grab your interest in some of these bearish ones. But then you look at some of these other companies and you do just see a pullback into reversals. I don't know. Obviously, GE is not a company we're going to target, but above MAs off of a bottom, I think we're going to see a lot of patterns kind of like that.
Okay. And a very similar, not similar stock, but similar type of reversal characteristics and whatnot. One that I really like that is starting to set up is Toll Brothers here, T.
Mm-hmm.
Obviously had a little bit of negative news with I want to get it right here, existing home sales saw a drop to 4.99 million homes sold versus an estimate of 5.27. So that was a fairly negative economic report. And with the home builders, Coach Mark and myself have been very concerned with it. And the reason we've been concerned for the last year about is look at this trend that has kind of been developing on the home builders in the last year, T. You're seeing this drop, miss, drop, miss, drop, miss, drop, miss, drop, miss, and then a big old miss down here. So this is the reason that Mark, myself, and others have been concerned with the home builders over the course of the last really kind of 2018, is we saw this data just drop. And so you've seen that look at Toll Brothers here, drop all throughout 2018. You're starting to see a little bit of, I don't want to say a little bit, you're starting to see a major reversal happening here though. And now you're starting to form a little bit of a bullish retracement coming back down into the breakout channel. You got to start liking that from a technical perspective, both as a swing trader with upward movements in price using the rules of swing traders. Obviously, that's a swing trader setup if we start to get confirmation. But look at this on the weekly chart, Tim. Look at the boom, 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 all the way down, slowing momentum, double bottom, breakout, retracement. You're starting to see some potential investing opportunities. And there's a reason we put this on the Tackle 25, Tim. It's a company we like. It's a fundamentally strong company. And technically, it's starting to set up.
Like to pull back, like to pivot, a lot of opportunities. I love what you said earlier, stock pickers market. That's exactly what it's starting to feel like to me. And that means you're going to see bullish and bearish, which is why we bird dog on the weekend, Matt, to go out and find all those candidates for sure.
Think that's going to take?
I think it's going to stick. Yeah, I really do. I listened to podcast 304, and by the way, hilarious podcast. Listening back, I enjoyed it even so much. And the bird dogging section, it's staying.
Bird dog's definitely going to stick. It just makes
It's
so much sense.
I should play some drops out of that podcast.
I did. Did you see those drops I put in Slack?
Oh, I have a couple that are really good.
Maybe at the end of the show.
Yeah. Well, okay. I'll tell you what. I will play a drop at the end of the show from the podcast that is hilarious.
Okay. I like it. One thing that and Matt, back on the S&P for a minute, if you would, and actually move on to the Dow while we're breaking down the indexes. One thing that happened yesterday is the International Monetary Fund, Christine Lagarde, we know how they can impact global thinking, but they're so reactionary. I mean, they've been talking about what's going on last year. They're not exactly like traders who are looking forward, but they did come out and say they're concerned about slowing global growth. Same theme that we know is going to stick throughout 2019. They also said, Christine Lagarde said, there's no real risk of a recession, globally and in major economies like in Europe and in the US.
Germany would disagree with her.
I agree with that. I understand. But she did come out and say that. She said, okay, we're going to slow down, but no recession. This is a theme that I continue to see from these economists. Did you see that news, and what's your reaction to that?
I've seen the news. I haven't read the everything about it, but it's just par for the course with them, Tim. I'm very concerned about slowing growth. And maybe she listened to the prediction podcast, because we talked about European slowing growth. We talked about slowing growth in China. We talked about how that was going to be the biggest concerns coming out there. The economic data out of China and out of the Eurozone has been very, very concerning. Not just, a little blip on the radar like Christine Lagarde tries to do, but that German data that we've seen recently is showing recessionary data. We've seen manufacturing data. Yeah, you want to look at GDP of China, that's fantastic. Look at the manufacturing reports coming out of China. Look what's creating that GDP, and you're seeing recessionary data coming out of China. So, yeah, if GDP comes in at 3.7%, are we seeing a massive macro global slowdown? No, but that doesn't mean we're not going to start to see recessionary in certain aspects of the Eurozone, like Italy, like Germany, and coming out of China. Just because Germany goes through a recession doesn't mean the rest of the market doesn't mean, my God, Japan's been through a recession like what, 20 times in the last 30 years?
Well, yeah, and they've had stagflation, that old term, for so long that because of it, I understand, and it is a theme that is developing. I keep hearing these economists talk about it.
And I want to be very clear here. I don't foresee a recession in 2019 either. I don't. But that doesn't mean the market's not going to lead that to become a recession in 2020. That's the concern. It's the slowing growth in 2019. How businesses are going to react to that slowing growth. Are they going to start capitulating on some of their business expenses, their projections, their ideas, their projects? Or are they going to start delaying some of that, given the fact that the markets are slowing down? It's this, cart before the horse. Which one goes first? So slowing growth in 2019 certainly could lead to a recession in 2020.
Yeah.
That's the concern. So, but Tim, I also want to give you just one point. In February of 2008, Ben Bernanke also gave a speech where he said he doesn't see any risk to the subprime market. He doesn't see any risk to the banks. He doesn't see any risk to the automobile industry. And yet 6 months later, we were going through the biggest recession since the Great Depression. Lehman Brothers is belly up. Bear Stearns is belly up. We had to bail out all the other 9 major banks, and all these other public corporations, and consumers basically spent the next 10 years just trying to catch up. And that was only 6 months after Bernanke gave a speech where he said nothing to see here. So if you guys, if anybody, and tackle traders are going to be cautious with all things central banks say, IMF says, World Bank says, Bank of International Settlements say, because they don't have our backs.
Yeah. Yeah, and I'm thinking about that as well as we're looking forward. And we've said this many times, you can have a bear market and no recession. So trade the price action. For a trader, I don't really care if it goes into a recession or not. I care what the markets are doing, right? Yeah. Because I don't trade the recessionary numbers. I trade the price action in the market. Right now, the Dow's down, markets are down. It's one day after a 4-day rally, and really one of the best starts to the year we've seen in a long time. So it is only a 1-day data point, Matt, but it is significant. There's 27 companies on the Dow down today. Only 3 companies are up. Walmart, Nike, and McDonald's are those three companies. Mickey D is actually looking pretty good. I like the chart on MCD, and Walmart as well. I've talked about Walmart. Walmart is one of our favorites. We have it on watch list for a reason. McDonald's breaking above a pivot here today. You're seeing strength in defense, Matt.
Nike got upgraded as well today.
Yeah, par for the course. Strength in defense. Yeah, down stocks. Go ahead.
I understand it's 27 versus 3 today, but I'm not taking today as, hey, let's go short everything.
No, it's not. Not yet. No.
Yeah. There's like you use those reports. Look at the stock and options report from this week. There's some really good setups, but there's not all of them setting up. Those reports are setting up for potential trades. And there's some really good setups today that we'll look at here in just a little bit.
Yeah, for sure. On the Dow, biggest loser today and Caterpillar, global growth slowdown, concerns internationally. CAT is going to drop 2.8%, but not exactly a shorting opportunity, just kind of more neutral in a range, Matt.
Yeah, and I get it, but I mean, you take outside the news. Take the news outside of it. Shouldn't Caterpillar drop today simply because it's hitting resistance and it's profit taking before earnings?
Yeah.
Isn't that, I know that doesn't get the headline. I get that. I know slowing global growth, China slowing down, Europe slowing down, new home sales decreasing. I get the headlines. But a more likely scenario is we don't have a lot of economic news this week. We're approaching major earnings and you're overextended. I mean, my God, look at the volume today. If people were truly concerned about Caterpillar, I'm pretty sure we'd have more than 2 million shares traded so far. You know what I mean? That's profit taking. You
just reminded me of Occam's razor, from philosophy and logic and judgment, that the simplest set of assumptions is all that you need, the minimum that you need to make a decision. Maybe the market was just overextended, needed a little bit of a break. I mean,
but I get the headlines because nobody wants to come listen to us talk an hour about, it's just profit taking. So yeah, we're done.
Look at the big brain on Tim here, by the way, dropping an Occam's razor reference.
Razor's reference there. Listen, it sounded smart, so you get it.
I can't believe you didn't take a shot at me. You had to have me take my own shot at myself.
No. Mark would have taken a shot there. I'm not taking a shot there because that's actually very, very accurate, number one. And number two, it's highly intelligent. And number three, you're a very educated man. So, no.
Thank you, Matt. You're making me feel good here today.
I'll take a shot at you in a little bit to bring you back.
I'm sure there will be plenty.
Throw a C'est La Vie out there and see what happens.
Je ne sais quoi. I don't even know. Oh, all right. The World Economic Forum obviously also happening at Davos. I have no interest in that thing. A bunch of billionaires getting together and talking about what they think about money. I mean, maybe if there's a headline that grabs me, I'll dig into it, but nothing. Think about this. I mean, you do have quite a murderer's row, a cast of characters here. German Chancellor Merkel is there. Prime Minister Abe is there. Prime Minister Conte is there.
Don't care.
Bolsonaro is there. I mean, everybody's there.
Listen, enjoy the wine and cheese, you elitist. Get out of here.
Yeah, I'm not
Didn't
really.
We just have the G20 last week.
We have all these international economic forums.
It's for people to justify getting together and listening and patting each other on the back and drinking wine and eating expensive cheeses and I don't.
That sounds like a fantastic time. I want to go.
Yeah, Cody,
I'm sure I would take the invitation if they invited me, Cody. I would get on a plane and go. There is no doubt, but it doesn't.
I would go viral. I would go viral. I guarantee I would do something that went viral on that one.
Matt would have an assistant there just to hold a camera on him.
I would. That assistant would be. I keep forgetting his name.
Borat.
No,
I don't know who you're thinking of. That'd be pretty funny.
Right.
XHB. XHB on a chart, Matt. I know we talked a little bit about home sales. You brought up Toll Brothers. I do want to just mention the data on that. Though that number that came through from the economic data was the worst number we've seen in years. Do you have real concern about home prices or real estate outside of home builders in price action? Yeah.
A rising interest rate environment after 9 years of appreciation to buy a home in that environment? Yeah, I'd wait.
Mm-hmm.
I would. Consumers are tapped out on debt. I mean, they are. I'm very concerned about consumers' ability to take on more debt at the top of the market. I'm very concerned about that, given the fact that you're in a rising interest rate environment. I'm very concerned. Yeah. There's a reason the data is going down in 2018. Because you look at it from consumer, you're buying $1 million home at the top of the market, and you're now getting 4.5%, 5% versus what you were getting last year at 4%. It's just consumers going to be like, maybe we hold off here. That's what you're saying.
But if you had to give life advice to a 30-year-old who needs to set up a home for his family, who's buying a $250,000, $300,000 home, you're probably going to say, listen, it's a 20, 30-year commitment, right? I mean, I get it if you're talking about
how much I care about the person I'm talking to.
Well, let's say they're family. And they're like, hey, Matt, what's your advice? I'm worried about getting into a home.
Tell them to wait.
Yeah.
I would absolutely tell them to wait. If it's some jackass on Twitter, no, I'd be like, whatever, do whatever you want.
Well, we have family who are jackasses on Twitter.
Yeah, and I'd probably tell them to go follow me on Twitter and get the opinion over there. No, I kid, obviously. But no, Tim, if it's a loved one, if it's somebody that I care about, if it's somebody that that I don't like, no, I'd give them the exact same opinion. Are you kidding me? Everybody knows me. I'm going to speak my truth regardless of the situation. I'd tell them that I would wait.
It's not a very heavy economic week because I'm looking at this calendar. I see the dip in home sales, obviously, here. That's what we're talking about now. But I look up and down the list, Matt, there's not a single red event all week long. In fact, we had to add the yellow just to get information about what economic data is coming in.
Is how much every one of us can care about economics this week. There's nothing.
It's not the focus. It's going to be earnings, price action, and what's going on in the market itself.
And Tim, I do believe a lot of that negative home builder data has been baked into the chart.
Yeah.
I mean, you look at Toll Brothers, we were talking about just barely. Toll Brothers in the last years went from a 52-week high of 52 all the way down to 28. It's had a massive recession already. It's had a bear market. It got cut in half in 2018. So yeah, it's not just us that knew the negative economic data coming out of the home builders. It was everybody else. It's the hedge funds, the institutions. They have the same data we do, T.
Mm-hmm.
Right? I mean, the only difference between the institutions and the hedge funds and consumers is consumers don't look at the data on a daily basis. Consumers don't do anything from an investing perspective on a daily basis. So I do think a lot of that negative data is already baked into this Toll Brothers chart. Looking at, if you want to focus just on the price action, which is what I do, I love this right here, even on the negative home building data coming out of it.
Yeah, I agree with that.
Hold on, Tim, especially if the Fed comes off their aggressive stance like they've indicated.
Well, they've been trying to tone that down, Matt. I think it's all fake, quite frankly. I think Jay Powell's going to raise interest rates 3 times this year, and they're absolutely are going to move forward with unwinding their balance sheet. I think they're acquiescing to a lot of the tone in what's going on in the market right now, trying to get things to stabilize.
I think 2 to 3. I think 2 to 3. Yeah. Most likely 2 in my opinion, but 2 to 3. And every time that they don't do it, they will indicate the reasons why they're not raising, and then they'll raise next time.
Yep.
And I told you this in the halftime in the prep work. I think Powell has a Powell put and a Powell call. I think he wants stagnation over the next year and a half so he can do his economic policy.
Listen, if you gave the Fed the option to have a flat market by the end of the year and raise interest rates and unwind, they would take it in a heartbeat. Of course they would. Yeah.
If they can keep the market stagnant in 2019, raise interest rates 2 to 3 times, and unwind $50 billion worth of balance sheet every single month, the Fed would throw a party for all of us.
They sure would.
None of us would make money because the market went flat that year, but they would. Powell wants to raise rates. He knows they have overwhelmed the marketplace, and he knows this is now a purely Fed-driven marketplace, and he knows that's not right. So I do think Powell's trying to buy time here. More than anything, I think Powell's trying to buy time.
Probably. NASDAQ 100, Matt, let's work through some of these NASDAQ charts. Obviously, when you have weakness in the market, technology is going to fade first in many, many regards. Energy, tech, some of these industrials, they're all down today. Tech down 1.8%, leads all the major indexes to the downside in terms of weakness. The advanced decline line, 94 going down, 6 going up. Pretty red candle. What you think?
It was playing catch up, and now it's coming into a major resistance level, in my opinion, Tim. I talked about this last week before I left as it was breaking out. Look for it to come back up into this 2,800. This is where our trend line is, and that's now the new market battle lines are being drawn. and obviously NASDAQ taking it on the chin here today. I am moving this a little bit more bearish. So if I'm looking for shorting opportunities, I am looking at NASDAQ and Russell 2000 right now.
Yeah, for sure. And but there are some companies on the NASDAQ that are showing me strength. We mentioned eBay earlier. By the way, eBay was on the stock report from January 11. And you've got, if you're in a long position on eBay, Matt, I know we kind of blew through it on the gapping news, but do you take
Of
profit on
course
this?
you do. Are you
Yeah.
kidding me? You always take gifts from the trading gods, Tim.
Yeah.
Always. I don't care. As an investor, it's a different beast. But as a trader, and you're trading that breakout of $30 like we had on the report on the 11th, and you're into that position, and all of a sudden it gaps up to $34 to $33, and it's already at your target in a day, don't get greedy there.
Close.
You take profit. You lock in. Yeah, you lock in.
Correct. You've got a gift here from eBay if you were long. Obviously, probably wanted to lock in on that.
Tim, you don't have to listen to us. You don't have to listen to Cody or myself say that. You can see that today. You can see it from the very moment it's gapped up. What happened, T? From the moment the cash opened, you had profit taking. And so if you're now looking at this, you're saying, should I lock in profit? Yeah, you're one of the last to lock in profit. Yes, you should always take the gift of the trading gods.
Another stock I like on the option report and also on the top 5 gainers for the NASDAQ today is Dollar Tree, DLTR. Has been a fantastic bullish candidate, Matt. I like the pivot and the way that it's developing here. And you've got some upside. You've got some potential on this company as well. And earnings are not in the foreseeable future. What's your read?
My read is that has confirmed.
Yeah.
I mean, it's confirmed the pivot back down, pivot back up. Yeah, I think that's tradable right now.
I like DLTR, that gap out, pullback, pivot, confirmation, strength on a day where the market's down. So you even have relative strength there, Matt.
You know, breaking it down to the intraday, when you're looking at this coming back down, if you miss this, I mean, Tim, what this is forming now is a pretty good little situation where it's coming right back down into this old resistance channel at 95.50 T. You look at that as a little bit of a pivot point back here. Obvious, the top of the very high of yesterday's candle was right there in that 55.50 barrier to 95. 95.74, 95.50 by 95.74. So if you're looking at this as a potential swing trade and you missed out on the entry above yesterday's high, look at that forming that little intraday retracement back down into that intraday breakout channel right here. And this is what I've talked about with traders in the past. If you miss it on the trigger, don't chase it. Wait for it to come back down to you a little bit, and that's what's happening intraday wise.
You know, and we are at the halftime point of the halftime report. I usually waited until the fourth quarter, Matt, but I'm going to do it right now. Guys, we're at 30 likes, 67 people here. We've got to get that 50% fib number. Give me a quick thumbs up. It's becoming our thing now. Give me a quick thumbs up. Let's get those up there. And by the way, in the chat, and if you're watching this later, Cody has made a very, very good point. Put a comment in the comments thread. Let us know what you like. Let us know what you do.
Just say great job. Say hashtag halftime crew. Hashtag team tackle. Doesn't have to be a big sentence.
Hashtag bird dog specialist.
Any comment when you're watching this on the replay helps us get our message out there to more people because it helps our SEO with Google. So yes, are we begging for some help to get the good message of tackle training out there? Absolutely. And I'm okay with that.
Just pointing it out. You know what I'm saying? You know, the reality is, Matt, here's the top losers. And I want you to tell me if you see a theme here. Baidu, JD.com, Mercado Libre, say that 5 times fast.
Chinese tech.
Lam Research and Micron. You've got semiconductors. You've got Chinese tech. You've got global.
All China related stuff.
Yeah.
All China related stuff. Whenever you get negative China news, they all go down. They all go down.
Yeah, I agree. You know, and we are seeing that across the board. Some of those companies, give me Micron real quick, MU, if you would. Micron down 5%. A lot of these chip makers, Matt, the semiconductors, they're in a mixed condition right now. We've got earnings coming up on companies like Intel and whatnot. This could go either direction here. That is in a compression. Volatility, though. Wow.
I see the compression you're talking about, downward resistance, upward support levels. It's creating a little bit of a symmetrical triangle type pattern, I would say. Let me kind of draw it for everybody so they can see it. So I definitely see this downward levels of resistance with increasing levels of support. Bearish symmetrical triangles typically have probability to the downside. You wait for it to close underneath the support level. I would say right here, right into that range. Aggressive traders that close under 34. Conservative traders that close under this pivot candle right here, I would say. On the buy side, I would have a hard time buying Micron.
Yeah, but it is a tradable signal by some, I'm sure. I mean, that breakout there on that pivot, Matt, you're breaking moving averages. It would be a very quick swing trading, quick hitter. And I'm not sure I would take it either. I would have a very hard time playing that.
A close above 36, above these channels over here, I could see an aggressive trader playing from 36.5 to 38 by 40. I could see that.
Could happen.
I mean, it's aggressive. I mean, you're talking Micron that can move 5, 6, 7% a day. You're talking Micron who averages over 3% a day. So, I mean, it's aggressive, but I could see it one way or the other. I mean, the question becomes, is this a potential bidirectional straddle play on Micron?
It very well could be. A lot of these chip makers are showing me the same thing, by the way. The SMH semiconductor holders, and you're seeing some movement. Straddle here, you're looking at the April contracts?
I'm just playing around for a second.
Here you go, right clicking again.
That's because it's the king's way of doing things.
Takes forever. My God.
Keep going. So right click by straddle, that would literally took that long. Really?
I could have made twice as many trades.
Okay. I kind of do like I kind of like a strangle straddle here. Micron loves to move, T. Micron loves to move. And you're in a symmetrical triangle pattern where it could bust one way or the other and run. Your risk is neutrality, obviously, because volatility has been high. I mean, implied volatility on these options right now. I mean, well, it's a little lower than I was expecting. It's at 50. I don't know. That's a potential trade there.
Straddle could play here.
Let's throw it out to the crew. Okay, symmetrical triangle on straddle. Probably have a slight edge to the downside, I would say, but only slight. We'll say 55-45 probability right here. Does a straddle make sense here? Yes or no? Yes or no? To the halftime crew. What do you think, T?
I think a long volatility strategy, a straddle, strangle, debit con, inverted butterfly, they all could be in play here for sure. Yeah, I can see it because you're going to catch movement. I don't expect Micron to stay in that compression. It's not going to make a home between the falling 50 and the rising 20. It will break and run one way or the other, in my opinion.
Anybody who's ever traded Micron knows it can run. Now, if we start to do something like this, that will lose on theta and it will lose on volatility. But that's not what I expect. I think the market's going to run one way.
Markets are continuing to weaken, by the way. I'm looking at the intraday here, Matt, and they continue to sell. Got a lot of halftime crews coming in, a lot of people. And by the way, Marie, I'm with you. # left click. Marie's always got my back.
Mind you, argument. Hold on. This is not an argument, Tim. When I trade, I left click. Okay. When I teach, I right click. There's a difference.
Oh, I like the clarity. I'm looking at the FANGs here, Matt, real quick. Just have to make note because we're talking about 5-6% companies on Baidu and Micron, but even Amazon down 3%, Netflix down 3.5%, Google down 2.5%. Facebook, the strongest out of all of them, only down 1.6%. Apple down 1.6% as well. You've got weakness across the board in tech, and that Amazon chart, and it highlights the problem right now with the market. You've got a consolidating, fading trend with all kinds of volatility, and earnings are on so many of these companies coming up, Matt.
Yeah, none of those companies you just listed you can touch. Not from a directional perspective. There's different ways to, calendar, cover, or straddle, or whatever it is. But there's no way you're taking a direction on any one of these. They're overextended to the top side in a marketplace that every trader's like, this isn't technically sound to run this far, right? So no, you got to wait for them to set up. Like I said, it's the stock pickers market, and we're certainly not going to pick stock, 7 days before earnings.
Yeah. Move on to the currency market here for a minute. Dollar sign DXY. I had the good fortune of having Coach Keith on our scouting report planning meeting. We talked currencies last week, and the dollar is kind of in a mixed range right now. There's no question. You've got the bear retracement. Red candle today looks like it may want to sell, but that's not even where the action is today, Matt. The pound's up another 0.7%. They must like whatever is happening there with the pound sterling. I'm not sure I agree with that, but the pound dollar, if you look at the currency pair, it's starting to show strength. Anything grabbing your eye in the currency markets,
Yeah,
Matt?
it doesn't matter what you agree with. If you go above 130 on the pound, that's a really good trigger on the buy side.
I agree with that. Yeah, I agree.
Now, I will not trade the pound. Okay.
Mm-hmm.
I want to be clear on that. I said it last week. I said it the week before. I'm not trading the pound right now. We have seen two situations right here and right here that would have blown up currency trades on the wrong side of the equation.
Mm-hmm.
Would have absolutely blown them up. I just, even above 130, there's too much fire there. There's too much smoke there.
Yeah, move on to crude oil if you would. And energy is obviously taking it on the chin. Global growth concerns going to hit all the aggressive areas.
Canadian dollar looks pretty nice right now.
I looked at the CAD as well, dollar CAD though, but if I'm going to short the CAD, I got to go long the dollar probably as a cross pair. And I do like the candlestick. I'm not.
Go to the weekly on it.
Yeah. That does look pretty nice on the long term. Yeah.
And that's how it hit my radar, was that the weekly.
Yeah, but if you're going to position trade that off the weekly, you got to find something to offset the risk to the downside on the dollar. Little cross bear action here.
Yeah, maybe do some cross bears.
Yeah, let me look at the dollar real quick. So if you're looking at this because I like that setup on the weekly, but it's an overextend on the downside. Maybe a short dollar, long yen trade.
Oh, I have.
By the state. Hold on, hear me out. You're taking the CAD, right? You're taking the CAD off the weekly retracement. You're short the dollar. You're taking the CAD, or excuse me, you're buying the dollar. You're shorting the CAD. You sell the dollar, buy the yen here?
Maybe. I might buy the euro first out of all of them, by the way.
That's a good, well, hold on. That is a really good bearish retracement on the dollar against the yen, guys.
It is, yeah.
I mean, I know we hate the yen because it's a trash currency. I wrote an entire Forex report about how it was a trash currency, but it's still a safe haven because it's such a trash currency.
Mm-hmm.
Okay, so if you need to read that Forex report, definitely go do that. That was a good Forex report for a couple weeks ago.
I agree.
But that's a good trigger underneath 109, guys.
Dollar yen cross pair might be setting up. Really, the action in the currency markets, as I'm looking at all the index, Matt, the yen is moving 0.5% today here. But the pound, I still don't understand the fundamental reasons why the pound is rallying. But like you said, it doesn't matter. Yeah, I guess. I mean, they're hoping for some clean Brexit and some better clarity.
We need to teach all the Forex traders about hope is not a defined strategy. But that's what it is, hope, Tim. It's hope that Theresa May gets more time, which she did coming out of last week's, no vote, no confidence vote coming out of, the parliament. So, yeah, it's hope. But I still think this is one of the better trade setups in the currency. It's the U.S. dollar versus the yen, and it's on the downside underneath 109.
Yeah. Let's move on to crude oil, some of the commodities. I also want to look at all the sectors today.
Real quick with Blake. No, I'd trade through a Wanda, MetaTrader 4.
Mm-hmm. The MT4 is a better platform. Thinkorswim, you can look up currency stuff, but it's not the best platform for trading currencies in. All right, let's move it on to crude oil.
And a lot of traders will use TOS as a way as analytics and to chart and use their research tools, and because it is a really good software, but they might go do their trade somewhere else. They might go trade Forex at MetaTrader platform, or they might go trade their option trades at, say, Interactive Brokers because of cost, and they might do covered calls somewhere else because of assignment fees that TOS is being ridiculous high. So TOS, we're going to do a lot of our analysis on TOS just simply because it's one of the better starting platforms out there, and it's a great options trading platform. I've never felt it was a great Forex platform though.
It's fine if you're just doing a button hook euro dollar cross pair trade, though. I mean, you can make it work. I've done Forex trades in Thinkorswim, but it's a very good point, though. A lot of people, because we don't care where people broker. It's not our job, right? That's your job. But the reality is a lot of traders, I know many traders who use Thinkorswim just for the analytics, just for the risk graphs, whatever it might be. And then they trade in other brokers as well and kind of set up their own system.
Don't get me wrong. I love Toss. Toss is great. Option trades, it's the best options broker out there, in my opinion. But they're just not very good. They're not built for Forex. MetaTrader is built for Forex, too.
Yeah, I agree. All right, let's move on to crude oil and talk about the energy. I'm looking at crude here today. Crude's down 2.8%. Brent is down 2.9%. Gasoline down almost 4%. Heating oil 2%. Even natural gas down 10%. The energy space is all getting crushed here. But again, same kind of market conditions, Matt. Unless it breaks below 50 or above 55, I'm calling it neutral. I know.
We're broken records there.
I know.
No, it's 50 to 55. It's nowhere between there. It's credit spreads and credit spreads and credit spreads and advanced options, selling strategies and all that. But from a directional perspective, there's no trade until it breaks 50 or 55.
Look up natural gas here real quick.
By the way, Tim, that's the same thing for naked puts for me on crude oil.
Oh, yeah, I would not do that right
now. Not on USO, but I'm not doing any naked puts on crude oil unless we break out of 55 either. I'm treating naked puts on crude oil as swing trades.
For sure. I'm looking at natural gas down 10%, Matt. And obviously, I know it's been cold. It's been warm. I have no idea what's impacting it day to day. It's very volatile. I've been calling this untradeable. You've been confirming that call for months now. It's just not tradable until we get a more clear trend and less volatility. You can't wake up and see a 10% move in a commodity and think that is something you can work with. Now, if you've got a specific system, it's just not normal behavior.
No. There's no specific system here. There's nothing. It's random. It's crazy. Makes no sense. It was cold over the weekend. I'll give them that.
I guess. Well, we did get like a foot of snow here in Utah, so maybe, I don't know. Who knows why the heck this thing.
It was all Utah. It's Utah's fault. Natural gas is down.
The energy space is all selling. Gold is trying to hold support. Move on to the metals here for a minute, if you would. 1280, Matt. What do you think? I like that bounce. I don't know.
I'm not there yet.
I like the candle. Big red candle puts pressure in the chart. There's no doubt about it. And you are sitting on the moving average right there. I like the strength of the intraday candle. It may not be there yet from a technical perspective. You've got complexity, and now I just can't trade gold because you put that fib on there. What are you trying to do to me? I had a good vibe with this gold chart. I was feeling good about it. Now you're putting fibs up there to throw me off. I don't like it.
Embrace the fib.
Yeah, I just don't count this as a pivot retracement. Fib confirms that for me.
Yeah. Dollar sells, gold buys. Is that enough for you?
No.
Gold breakout of 1,300. Different story, though, I'm sure.
You give me a retracement to 1260, 1265 on gold. Yeah, I'll take that. Outside of that, I'm waiting for the breakout of 1,300. So either it's going to retrace to a proper retracement or it's going to break out. I don't trade short retracements. They get faked out way too much.
Silver flat today, 0.2% down. Platinum, copper, palladium, all down about 2%. Global growth concerns. You're going to see industrial metals also fade. It's the nature of the beast. Copper down 2.1%, tied to that China deal. Number one user copper in the world. The one I'm watching, though, is gold. Even if I end up trading silver before gold, it will be gold here first, and I probably will trade that breakout at 1,300. I know I will when that happens. I'm with you. I haven't pulled the trigger yet on this candle. I do like it. I don't know if it has to come back to 1,260. I could obviously map that out in my head, and I would like that as well. I'm just interested in buying whatever dip ends up developing, Matt. Like that needs candle mindset, right? As long as a candle kind of develops on the pullback and then you get a good trigger, that's really what I would want to see.
Yeah, and until it gives us that, just let it do what it wants to do, T.
Yeah.
This is an intraday movement. This is not a daily movement.
That was very zen of you, brother. I like it. Trading in the art of, being zen with it. I like that mindset. Let it do what it wants to do. And when it does it, you do something with it, right? Yeah. Pull back, pivot, trigger, then you buy. All right, let's go through the sectors here real quick, Matt. Why don't you do that? And Cody, come on in here for a second, because I know that you did the newsletter over the weekend. We could either do it on the newsletter post or we can do it from a watch list here. Let's kind of break all these down, Matt. On our first day of the week, we always do a full prep. and that includes sectors. So let's go through these one at a time.
Yeah, Cody, take a moment and just kind of explain kind of why we ranked the sectors the way we did, and then I'll take a look at the charts, okay?
All right, so let me pull up the gridiron here on my page. So the first thing that kind of stands out when you look at all of them is everything kind of got shifted towards that bullish side into neutrality. And then from there, it was the big debate, and a lot of the coaches were like, "Oh, Tim, don't make me do this," because we were like, the S&P is at 50. So are we more bullish or less bullish on this one? Because it was pretty much all around agreed upon that we were neutral in just about every sector, but were we leaning bearish or bullish in that neutrality bias?
Well, you can't call everything 50. All right.
Yeah, that's the thing. So we started breaking down and just going one by one. Just, okay, all right, US dollar. We got it as 52. So having the market and the dollar at the 50, it's like, all right, basic materials. Well, what are we seeing with basic materials? Okay, well, we had a high base and kind of a bull flag. So it's like, all right, those are more bullish signals. So we're going to be a little bit more bullish on some of these basic materials. Mm-hmm. Communications, we had a break above those moving averages. So, and we were holding up there, and it looked like it was continuing to hold above those. So a little bit more bullish, still neutral. And I went through, and actually on the report I did this, I went through and just kind of said how we were going down each of them, why we became more bullish. The most bullish one we ended up having was real estate, and it's the only one in green right now. And that's just because it was literally above every single moving average, including 200, with some open air above it.
Mm-hmm. It's a tough thing in this market, Matt, when you have a V-shaped recovery that has violated old support. And so going through it sector by sector, you can start to identify some strengths and weaknesses in certain areas. On a day-by-day basis, as these things develop, our calls are going to change, which is what you should do as a trader, by the way. You're supposed to be a flip-flopper in trading, because if the market shows you something different, you have to react to it. There's an old mindset, trade what you see.
I said that the other day.
Yeah.
The biggest flip-floppers in the entire world are traders.
We have to be.
You have to be.
If I get stuck on an opinion and say, well, I always love crude oil, no matter what is happening, I'm going to lose a lot of money when it crashes, right? Like in the fourth quarter last year. When markets change, you change with them. That is the mindset 101. There's no doubt about it. As you go up and down the sectors, Matt, I want to get your take on a couple of things, but let me give you a few data points. Year to date, the best performing sector in the S&P relative to the S&P is energy, 4.7% relative to the rest of the market. They've actually made an 11% run, even with the sell-off here today, followed by industrials, communication services, discretionary, and tech. And materials, all the aggressive areas of the market. And yes, even financials were up there as well. They've all been moving higher. The underperformers were staples, healthcare, utilities, and real estate. That's usually a sign of a defensive type market not needing to move up as much. But here today, we're seeing some rotation back into defense. What's your read on the sectors?
When I'm looking at these sectors, Tim, and they all look very similar to one another. I mean that's just outside of utilities, right? In this V-shaped recovery, they've all recovered. Every sector is recovered. I mean, outside of utilities, which kind of flatlined. But that when you have V-shaped recovers like this, Tim, you're going to look at a very similar pattern within all of the different sectors. So it's kind of hard. And what I kind of look at when I'm ranking those sectors on the bull versus the bear, and where I want to put them on the yardage marker, is basically, okay, which ones have violated those trends? Which ones have gotten above those pivot points? You take industrial here. Industrial is now above its pivot points. It's above its 20-day moving average. It's above its 50-day moving average. So obviously it's getting beat up here today, as almost everything is getting beat up here today so far. But from an overall recovery, it did get back up above all the moving averages. It got back above its pivot points. You look at discretionary here, the exact same thing. You got above the moving averages. You got above the pivot points. You're above the high base. I think you got to get, honestly, guys, if we weren't V-shaped recovery, I think you would have some of these sectors in the 30, 35 yard mark if we didn't just think everything was completely overextended. But if I was just looking at this, guys, just that, a breakout of that high base, I mean, that's bullish in that capacity. But obviously you got to take into account everything. When I'm looking at, say, energy here, T, as a little difference, energy is above its moving average. Everything got above its 20-day moving average. But what energy did not do is get above 64, which was the pivot point. Unlike consumer discretionary, unlike industrial, it never recovered enough. I know it recovered percentage-wise, Tim, but that's only because it dropped further than the other ones did. So yeah, PCG was up 10% today. Should we all buy? Oh, energy's up 12% year to date. Doesn't mean we should buy. You got to focus on the technicals here. And for me, I would personally rank energy lower than I'd rank discretionary, than I'd rank industrial, simply because it didn't get above its pivot point. You look at consumer staples here, same type of thing. I mean, its pivot point was all the way up here. That still looks like a potential shorting opportunity. So when I'm breaking down, and then you take into account communications, broke out of its trend line, real good recovery, not just solely above the pivot point. So, I got industrials, I got communications ranked all above that. You look at technology, staples, and energy. If I was looking for shorting opportunities, Tim, I'm looking at, anything under, say, 63 and a half on technology as a potential confirmation, on not industrials, but consumer staples. That to me is already confirming, if you want to be a little more conservative, maybe under 51 and a half, but you do have opportunity out there on the short side. I like energy on the short side. I like staples on the short side. And then some of the ones have, overperformed. So I get the difficult nature in ranking these, because they all look so similar to one another right now.
Yeah.
But you do have some that are underperforming. So like, take energy, for example. Me personally, in energy, when we have it ranked at a 40-yard mark, guys, you're looking at a potential bullish trade, guys. That's what you're looking at. If it's on the 40-yard line, you're looking for a breakout, and you're trading that breakout, because if it breaks out, you got to go a little more bullish. Me, I wouldn't have ranked it right there. I would have had a negative 40-yard mark, just given the fact that it was overextended coming into the breakout channel, and a confirmation would have clearly triggered a bearish trade on the downside. So, and this is why I love that scouting report meeting, because you have 7-8 coaches who all fill out this data, and it's giving different perspectives. And I just love it, because sometimes we just look at it in our own view, and we miss certain things. So all of these coaches at Tackle Training, they rank things based on how they see things, and I just absolutely love it. So, but I'll be the first to admit, guys, ranking any sector right now is very, very difficult.
Well, you've got V-shaped recoveries across the market. Here's the reality: is if the aggressive areas in the market sell, energy, industrials, materials, tech, discretionaries, all of them are going to get crushed, but that's how this market is moving. It's moving in conjunction with each other. The subtleties of what's happening stock by stock, and a lot of this is going to play itself out through earnings season.
Yeah,
I will remind everybody, we are nowhere near. There are 12% of the companies on the S&P 500 that still are reporting earnings this week. And from an earnings heat map, and I love the heat map that Cody, that you put in the newsletter that shows the earnings heat map breakdown. I mean, there's not that many baby blue companies, Matt. They're mostly pink companies that still have earnings down the pipeline. As I look at that, it makes me realize, okay, this market's got a long ways to go.
Well, not tomorrow, but today, Johnson & Johnson, IBM, Halliburton, TD Ameritrade, Capital One Financial Group as well are reporting later on. Tomorrow, Abbott Labs, Comcast, Lam Research, those companies reporting. Southwest Intel. Let's see, E-Trade coming out on Thursday, Starbucks coming out on Thursday, and then on Friday you got a few as well. I would say this week is a medium week from earnings. Next week's the big one.
I agree. And by the way, we made it
real quick, T. Tackle 25 stocks reporting earnings this week: Starbucks, Intel, E-Trade.
We made it a whole hour without talking about the wall. Guys, if you want to get away from politics, come and join the halftime report. Now we don't.
That is not always a true statement. Do not accept politics here.
Listen, hold on. People who shun discussion of politics because they lack critical thinking skills, not our target demographic. Politics drives price. You have to talk politics. You have to understand. You have to understand certain things. If we get a massive infrastructure bill this year, guys, yeah, I'm gonna probably buy Boeing and Caterpillar, and it's
not talking politics is one of the reasons that people don't understand politics.
Yeah, it's ridiculous. But I'm not. With that said, I'm not touching the wall today.
No, neither am I. I will say this, critical thinking is the number one skill, essential learning skill that I identify with any new trader. If you can't think critically, this is probably not for you. Life might not be
No,
for you.
if you can't separate politics from price, you should not trade. If your trading philosophy is based on your political philosophy, I feel very sorry for you, because you're going to lose a lot of money.
Oh, I've seen it many times. People who hate this or that or the other thing, they get tied into the worldview, Matt, and then they end up investing based on their worldview.
Tim, coming into 2018, I read an interesting study, and I talked about it on the podcast last year, that 97% of registered Democrats thought the market would go down that year, and 97% of registered Republicans thought the market would go up that year. That has absolutely nothing to do with philosophy. That has nothing to do with economics, and that has nothing to do with valuation. That has nothing to do with price action. That has everything to do with their political philosophy. And again, I feel very sad for people that cannot separate politics from real life.
Yeah, I agree 100%. A couple of rapid fire ones, and we're going to, obviously maybe break down a few companies here tomorrow, Matt. From the option report, I like that DLTR that we did talk about. Delta Airlines, Chicago Mercantile as well, DAL, CME, both interesting.
Yeah, DL, that's bearish, low base, symmetrical triangle.
Give me on the stock report, Bed Bath Beyond, BBBY. This is one of my favorite patterns set up here, Matt. Little bull retracement pivot after a huge move on earnings a couple weeks ago.
Yeah, cheap risk, and we've talked about cheap risk in the past. Cheap risk is when you get it off the retracement, good trigger above the candle highs, stop loss right underneath the candle lows. Cheap risk. A couple ones that I like here, Tim. We already talked about W Day from the option report. If I could type in the symbol correctly, W Day breaking out and holding above the 170 channel. I do like that from a potential breakout situation. Real strong stock over the course of the last little bit in a market that's been crazy too. So look at that above that 170 mark on workday. Another one we already looked at is Dollar Tree and Toll Brothers. From a bear standpoint, these are the ones that kind of are standing out to me today. And again, those scout reports got about 20 different bullish and 20 different bearish picks on there. But CXO right here, little bearish trigger underneath these 120, a little close underneath 118.5. I'm thinking in that range. So CXO is trying to confirm on the downside. And then you have BBY, Best Buy. We've been waiting and waiting and waiting. I'd still wait a little bit. I'd like to see that close under 56, but keep your eye on Best Buy as well. And then Apache here, I also like coming into the 50-day moving average with a trigger underneath this range of candles here. So those are a few I'm looking at coming into the week, T.
Awesome. A lot going on at Tackle Trading. Obviously, the coaches show tonight. We've got our mastermind group, Bear Market Survival Guide. If you have, and by the way, I'm going to make a call to action here for all of my loyal halftime crew. If you've started a course at Tackle Trading and not finished it, go finish your dang course. All right. I went and looked at some of the back end data, Matt. We have a lot of people who are like 2/3 of the way through some of these courses. Finish the stinking course, right?
Guys, it's not just that. I see it across everything in life. People start something and then don't finish it.
I get it. We're all busy. I get it. No excuses. Bear Market Survival Guide. If you've started that course, go and finish the course.
7-step. If you're new to the market and you have started the 7-step guide to trading, hey, guess what? It's a real good course that we did for free. It'll teach you how to find a trade and prep a trade and place a trade and manage a trade and how to journal. Boom, done. Go
and do it. All right. We will be back tomorrow. EOG from last week's report. Frank brings up a good one here.
Very similar to Apache and CXO. Very similar.
Good call. Twitter, Matt, we are real active on Twitter lately. And when we say we, I mean me mostly, because I've been,
you've been awesome. Your Twitter handle, and I said this to you last night, that's how Twitter should be done. And I love it. So if you want to give Tim a good follow, guys, at Tim Justice Utah. I'm back the next few weeks here. I'll be doing some tweeting as well at MattJustice13, and always use the hashtag Team Tackle, and we're building good little following over there. So if you want to join us and for daily commentary when we're bored, check us out on Twitter.
I like it. Good job, Cody. Good job, Matt. We will see everybody halftime crew back here tomorrow, and get in the game, get out there and do good.
Yep.